Hello, everyone, and welcome to the home-based version of Girard's Monthly Market Update. I'm Senior Vice President and Wealth Advisor Jim Jacobson, and on the other side of today's webcam is Chief Investment Officer Tim Chubb. Thank you for joining. So the last time we talked, the market was doing backflips to the downside, but more recently it's been resurging to the upside. Tim, give us some context as to what is driving this in the short term and what it might mean for investors.
Yeah, sure. Good to see you, Jim. I'm calling from my dining room, and I think if we have to do this virtually next month, or we're still in lockdown, I'll have a full-blown man bun with me refusing to let my wife cut my hair. But yeah, I think I think in the last couple of weeks, what we've seen is really support from the financial markets in really two different areas. One has been cases really starting to slow within the United States. And so at this point, about 80% of the US population is now seeing daily case growth less than 10% per day. And so that's been a huge sign to see the curve completely flatten, start to trend downward in the opposite way that we had been seeing throughout middle of March. And in the meantime, we've seen massive stimulus and efforts take place from both the Federal Reserve as well as Congress, which have really made this more of a biological crisis as opposed to a financial crisis. And so those two actions from Fed, from Congress, as well as seeing the social distancing actually work across our country has really enabled us to see that the markets calm down and start moving in the opposite direction. I think at this point, and we've heard this a lot in the media, there's been a lot of talk about the shape of the recovery, the shape of the decline. We've heard L, U, W, all sorts of shapes. But I think really the three things that we're focused on at Girard is I think three different timelines. How quickly we'll see normal, which I believe will only take place with a vaccine. How quickly the economies will start opening up, and I think this is going to be state by state and very difficult to I think predict as far as economic data is concerned. And then I think the other piece is consumer confidence, and like we saw during 9/11. Until TSA really started to take hold and I guess bring people back on airplanes, I think there's going to be a lot of concern and lack of consumer confidence, which could cause the economy to stick in the mud throughout the summer. But ultimately, we'll have to see how things shake out. It's going to be difficult to predict.
I think you're spot on with the thought that uncertainty is here for the short term, and there's really no hard and fast playbook to fall back on from what this scenario is. We all know that in the long run, science and social changes will come out on top, but in the short run, we're craving clarity. That's a really important thing for the markets. And speaking of clarity, we're in the midst of earnings season right now. This is the time every quarter where chief financial officers come out and they talk about the quarter that was, and more importantly, they set an expectation for the quarters to come. But right now, a lot of financial officers are not giving any types of guidance. They're very hesitant to do so for understandable reasons. So does it really matter in the short term if they don't give us guidance, especially if we're talking about long-term investing?
Yeah, like we always say, markets are forward looking, and when there's nothing to look forward to because companies are not providing any guidance, it makes it really difficult to understand the valuation of the market. Analysts were anticipating on March 31st that earnings would decline about 7%, which is the largest quarterly decline since late in 2009, where we saw about 15%. As we're recording this, the companies have actually reported, and there's been just a few, about 15% earnings decline. And it's supposed to get even worse for the second quarter as we see the impact of having the economy held hostage by social distancing and shelter in place, which has been absolutely necessary, it seems. But earnings decline around 26%. But I think what we're understanding is there's a wide range of outcomes. We've never had demand completely evaporate like this before due to a biological crisis, or at least not in modern age. And I think, moving forward, when we listen to these companies talk about last 3 months, it's going to be more important to focus on their financial health, how much cash they have on their balance sheet, do they have the ability to go out to the debt markets to raise money if they need to? Basically, will they be around when this economy starts to really turn back around? And we're going to see there's going to be a lot of companies, especially some of these retailers have been announcing recently that they may not be around when the economy reopens back up. And it's really been accelerating some of the trends that we've been seeing within the last decade as consumers move more online. So ultimately, I think there's a wide range of economic outcomes to expect this year. I think that range has narrowed because of the actions by the Fed and Congress. But it's still difficult to really feel good about the market from a valuation perspective with how much uncertainty is out there.
You bring up a really good point with retailing, and that makes me think of the great economist Joseph Schumpeter, who coined the term creative destruction. It's one of my favorite terms. I'm sure I hear it. I say it a lot and hear people hear it a lot, but it refers to how when corporate events and economic events cause great upheaval, that's the destructive side. But then out of that, these changes bring new and unforeseen opportunities. They unlock opportunities. That's the creative side. So I often think of Sears back in the early part of the 20th century. They kind of dominated retail with their catalog. But then by the late part of the 20th century, by the time the 1980s came around, Target and Walmart had essentially pushed Sears aside, and only themselves to be challenged now by Amazon with the age of internet retailing. So it's playing out with the auto industry right now as well. We have automation, we have ride sharing, and eventually we'll have driverless technology coming in. Those are all good examples of creative destruction. So now what we have with this coronavirus is some speeded up creative destruction. So when we look forward into what I would call the post big bad bug era, what are some macro trends, let's call them creative forces, being discussed, and how might we take advantage of those opportunities?
Yeah, I think this has been an economy in a lot of ways of have and have nots. And, we've seen many companies, unfortunately, have to focus on near-term survival. Like you had said, many of these retailers who are just trying to make rent, for the next month, whereas there's been, Amazons and some of these other large retailers like Walmart and Target who have absolutely thrived. They have a large percentage of their sales that's attributable through, groceries. And I think what we've seen is a lot of these large secular trends be accelerated by this COVID-19 tragedy. I think consumers, companies have learned that we can operate remotely. Work from home is probably here to stay, or at least will be growing more quickly, which has some implications on the commercial real estate market. It has some exciting investment opportunities for some of these web-based telecommunication technologies. And so I think as we look at the aftermath of this, I think we're going to see a lot of these tech trends like cloud enterprise infrastructure really start to take another step forward. And I think it's going to be exciting to see, what investment opportunities now have presented themselves, and I guess further ingrained in our culture as a result of what we've had to go through.
Excellent information, Tim. And I think as strange as the current times may be, the future times to come are actually going to be very amazing and remarkable. There's going to be so many opportunities come from this. And frankly, we haven't thought of them, and we wouldn't necessarily have thought of them if we weren't thrust into this rather strange way. And in some ways, what we feel is new, the world has gone through many times. So it's old for the world, but it's new for us. So good insight all around. And I look forward to great opportunities down the road. And I thank all of you for joining us today from your homes and from our homes to you, wishing you all the very best. I hope everyone is safe and staying well balanced. And we look forward to talking with you again next month.